Hi friends, this is Kishore. Welcome back to my channel. Last week is a massive week for bulls. Let's see how the market internals looking for this week, and I'd like to cover sector performance, Apple earnings miss, FOMC meeting, Iowa Citizens Bank value, next week earnings scorecard, 4-year election cycle, November seasonal chart, index analysis, and finally JP Morgan CEO warning. This is not a finished advice, just for knowledge purpose only. Let's jump into the show. So the fear and greed index is showing fear. We know last week it is in extreme fear. Last 1 month it is toggling between the fear and extreme fear. Let's hope it will go to the neutral soon. And this is heat map, daily heat map. We can see most of them are green. Nvidia is green, and most of them are green. Very few are red, like Lily and Estee Lauder. And this is bubble chart. Most of them are good. Very few are in the under the water. The bubbles FTNT, Pan W, and Estee Lauder. And this is a weekly heat map. We can see the sea of green. Most of them are red, above like 4% or 5% kind of thing. Massive week for the bulls. And this sector performance, all sectors are green. We can clearly see the real estate is a massive week for the real estate. The one of the reason is the in the FOMC meeting, Powell said there is a no rate hike, and but he did not say anything about the December. He said there is no decision right now on the December. But even though people are expecting, or market is expecting, there is no rate hike on the December also, I think that's the reason real estate went up like crazy 8%. And this is FMC meeting outcome. They did not raise the rate last two times after 11 straight hikes, and he said that the process of getting inflation sustainability down to 2% is a long way to go. This says there is a chance to rate hike coming, may not be in December, maybe in the next year. But market reacted very positively to the statements and ran. And this Apple disappoints the earnings. So the sales is down continuously 4 straight quarters. Even though the sales is down, their revenue is up and the profit margin also up. So that's the reason, even though the Apple stock is down, not that much, because of that revenue and the growth. And this is Citizens Bank was closed on Friday, Iowa division of banking. So one more bank is failed, and it is right now under the FDIC control. And this is the next week earnings. Like, this is, I guess, this is the week we are having lot of earnings are coming, but next week maybe very less. I'm a little bit want to check how the Roblox is doing, Twilio, and also the Rivian. And this is the till now this is the earnings scorecard. So till now the S&P 500, based on the earnings that were released, it is saying the PE is like 19.6 for this 2023, so which is good. Above 16 or 15 is considered good. So right now it is 19.6. That's a good one. And it is for S&P industrials, it is 21.2. For S&P mid cap it is 8.3. So mid cap is little bit lower, like under 15 we can consider is like a very bad PE ratio. And we can see the small cap is 12.9. So there is a chance these two can go up, and the Russell 2000 is showing like 23.5. And this is the scorecard for the S&P. Till now, around 403 are reported. Out of 403, uh, most of them are good. We can clearly see here. We can clearly see here 5.7% on the positive side on the earnings, and in the revenue side 1.2%. Very few sectors are red, like real estate, healthcare, materials, and energy. And in the revenue side, utilities, materials, and energy, not the real estate and not the healthcare. So revenue side, few of them are lagging, and the earnings side, few of them are lagging. But hopefully they will come up, because when the rates are paused or rates goes down, these sectors, especially real estate and the energy sector, may go up. And this is the year over year S&P 500 year over year growth rates. We can clearly see here till 24 of this is for every quarter how much they are expecting the revenue, net income, and earnings. This is a 2023 third quarter and 2023 fourth quarter, like that. Till 2024 fourth quarter, this is good. Only in 2025 first quarter and the second quarter they are not growing not much. And you can see the net income is going down and the earnings also going down. So this is where the issue is, I guess. Even the 2024 third quarter, the earnings are posted, I mean, there is a chance of down compared to the second quarter. So this is where the issue is. But let's see when the next quarter what happens. And this is PE ratios. It comes in the WSJ channel, and we can clearly see here the Dow Jones is right around 24, and after 1 year, like what is estimated? So it is like 18.67. So this is a little bit above than the estimated one. transport is like 13.90, estimate is 14.85, so it can still go up. So like that we can clearly see here, this one all are Nasdaq 100 is like 29, the estimated after 12 months is 25. It is a little bit overboarded. So there is a chance on the pullback on the Nasdaq 100, and there is a chance of the transportation can go up. And this is 2023, the like this is a 4-year presidential cycle. So the stock market follows the 4 years presidential cycle. You can clearly see here the red lines are the 2021 to 2023, and the solid lines and the dotted lines are the pre-election year pattern. So right now we are here. So after October, from November to the next year, so this is like the line for 1 year. So we are in the third year now. So after the November, we can there is a chance of to go up based on the pattern. And this is November market performance. We can clearly see here the first 4 days, like this is like trading day, first trading day, second trading day, third trading day, like that in the November, up to 21 trading days in the November. So the dashed lines are the current one, sorry, pre-election year. The solid lines are the regular all years consideration. So the dashed lines we can clearly see here, like first 4 trading days it's going up. We can clearly see here the red line, the Russell 2000, like IWM, is like solid gains up to first 4 trading days, and then a little bit pullback here up to 7th day, and then goes up, and again there is some choppiness. And from 17th trading day all indexes are going up. So the first 4 days, and there is a 7th day to the 10th day, and then from 17th day to the 21 days. So this is what the current pattern for the November. Let's see whether the current market follows the seasonality or not soon. And this is TNX. This is a big drawdown for this week. It's almost like 7.3% down. So this fueled the market, especially the growth sector stocks skyrocketed with this fallback in the TNX. And also the TLT, it went up like crazy. It hit up almost like 88.47 and rejected. But if it crosses about 88, then it can 90 and 92. There's some small gaps are there. If the gaps are filled, then it's a good chance that TLT can go up to the 100, and this is, we can consider this is a bottom. Till the gaps are filled here and the gaps are sustained here, we cannot say the 82 is the bottom, because again in this week Treasury, US Treasury announced like 9 billion to 112 billion reboosting funds. So when they do that, they issue the long term bonds. So when they issue the more bonds, the TL, the 20-year bond can go down. There is a chance on it. And this is a dollar also down in this week, like almost 1.7%. This is also fueled a lot of stocks, especially cloud stocks, and also the uh, gold commodity stocks. So this is also added as the tailwind for the market. And we know that the dollar performance well in September. So this is a seasonality chart for the dollar. We know we talked about this chart in the seasonality chart in September and also October. So we are in November. So in the December there is very less chance of going up. So this will fuel the transport, not the transport, sorry, commodity stocks and the cloud stocks. And this is crude oil. Crude oil also pulled down this week, like almost 5.16 percentage. So all this like TNX yields and dollar, crude oil, all are down this week. That added the tailwind to the market, and the market went up like crazy for this week. And this is the S&P 500 stocks about 20-day moving average. Last week I shared this chart, and at the time it is like 14 point something here. So this in this 5 days it went up to the 73. This had a lot of thirst. This got a lot of thirst to the market. So it means like a lot of volume came to buy stocks in this week. And especially I see last 10 years November first week is extremely bullish from 2014. And this is IWM. So IWM jumped from 162 to the 174 in this week with good volume, and also CC also is going up. So this is a very good thing for the small caps, because if the rates are paused and if they don't rise the rates, that's a very good thing for the small caps, because they are nailed down to the lot of stocks are almost like multi-year lows. So this helps them to make a bottom and rise. And this spy also like two gap ups on Thursday and Friday. So and especially on Thursday there's a huge gap and also bullish engulfing candle. But the volumes are good, but though the volumes are a little bit first 2 days are low, Wednesday, Thursday, Friday, these 3 days the volumes are also good, and also CCA is also going up. So if it crosses this 438, makes this lower high. If it goes below 438, it means again it fall under the lower high. If it breaks this 438, then this downtrend of lower lows, lower highs is broken. Once it is broken, then there is a high chance to go to the 444 and then 448. So this is QQQ daily chart. Again, this one also, like from 342 to the 367, it went up like anything. The volume is down last 3 days, but the more than the average volume, average daily volume, and the CSA is also going up. But only one thing is, it's right now it is also the lower high only. It should cross that the 371 and then 373. If it breaks that one, then that lower high, lower host trend is broken. Once it is broken, we can expect the near term high. And this is Tesla chart. I draw two Fibonacci levels and also the Fibonacci circle. The first Fibonacci level I draw from 151 to the 298 level, and another Fibonacci I draw from 211 to the 279. Both the Fibonacci levels are matched here, like at the 225 level. It's a 0.786 level of inner Fibonacci and 0.5 level of outer Fibonacci levels at the 225. And also the Fibonacci circle is matching, cutting these Fibonacci levels on this zero line, in the zero line. So the 226 level is very crucial level for the Tesla. If it breaks, then we can consider that is a 193 is a bottom, short-term bottom, and we can expect the 245 is the next level. And lastly, JP Morgan Chase CEO Jamin Dimon wants, this is the most dangerous time for the world in decades. So he said this one based on the bank's earnings and the bank's data, but based on the Anna Cooling, this two from the slides from the Anna Cooling book, volume price analysis. Like they use the big players use the media as their vehicle to fear the retailers. So that's the reason he did not talk about last week, or because the bank earnings came few weeks back, and he's saying now it's the most dangerous time based on the bank earnings, not on the bonds. But based on my understanding, we should follow the charts, and then based on that we can take a call. This is my assumption or my opinion only. So this finally, there is a saying from the Jesse Livermore: "I never argue with the tape." So whatever the chart or whatever the tape is saying, just follow that and see. Based on that, you can take a decision. That's what Jesse Livermore says. He is a great stock trader. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. And if you like them, please subscribe. Please share this content if any of your friends looking similar kind of content. Please hit the bell icon so that you'll get notification when I upload a new video. Thank you so much. Bye bye.